Hello and welcome to the Opening the Gates UK property market update for Q1 2024. I'm going to be looking back at Q1, so January 1st to March 31st of 2024, comparing it to recent years. We'll also have a bit of a March update as well with the various house price indexes that have come out. So let's jump into it, and I hope that you enjoy it. Right, so to start with, we are going to be taking a look at some stats that I have put together, and shout out as always to 20EA for the data on this that I've gone and collated. So let's work through the Q1 update. Just to confirm from left to right, we've got Q1 24 versus Q1 23. Q1 24 in the middle versus Q4 2023, and on the right hand side Q1 2024 against the 6-year average. So first off, on the market, so i.e. properties that are currently for sale, up on Q1 2023 by almost 16%, almost 3% up on last quarter, and 14% up on the 6-year average. So all positive news there, a lot more choice for consumers. Clearly there's increased confidence, more positive sentiment in the market, with more properties being for sale. Having said that, this does not support significant price drops in the market. We'd need to see a lot more property for sale than we've got now for there to be significant price drops. So it's probably going to be a common theme in this episode, as I did in episode 2 with the February market update, and that's stability. New listings up about 12.5% on Q1 23, up around 43% on last quarter, and about 10% up on the 6-year average. So great news. Again, more listings coming to market, which is positive signs for estate agents and pipelines going forward. Unsurprising that it's 43.5% up on the last quarter, being Q4 of 2023. You're typically going to find more properties coming to market in the first quarter. Again, great news on sales agreed, up almost 16% on Q1 2023. So we are moving in the right direction, which is great news. Again, unsurprisingly, up just over 30% on last quarter. Again, there's going to be more sales in Q1 than there is in Q4. And we're only 1.32% behind the 6-year average. So again, I would have said this in previous recordings, but you've got in this data, we've got two years of pre-COVID, so 1920, 2 years of COVID, 21-22, and then post-COVID, 23-24. Now, of course, probably the last week of March 2020, we were in the first lockdown as well, but only being 1.32% behind on the 6-year average, I think is incredibly well done. Price changes, so up about 11% on Q1 23, up about 10% on last quarter, and up 29.5% on the 6-year average. So again, price changes are continuing to happen. So is that too many estate agents overvaluing, too many sellers being over optimistic on the price? Probably a combination of the both, which is what I would have said before. But again, look at the data from Rightmove that Tim Bannister's gone for a few times at different conferences and on Rightmove webinars. If you are reducing your price, you're less likely to sell it, take longer to sell, etc., etc. Number of properties withdrawing up about 9% on Q1 23, up almost 24% on last quarter, and about 6% up on the 6-year average. So unsurprisingly, if there's more properties price reducing, which means they're less likely to sell, there is going to be an increase in the number of properties withdrawn from the market. That then obviously means if they're withdrawn from the market, they're not selling, and that's why the sales agreed have been down recently as well. Fall throughs up ever so slightly on last quarter, Q1 the year before, and on the 6-year average. Not much to report on that really. They're going to be up on the first two columns, with there being more sales agreed. Being slightly up on the 6-year average would say to me that the power of using things like Gazelle as a reservation agreement and trying to get all your information to hand as well at the start, material information. Really interesting podcast actually recently and shout out to Mark Worrell, Ian Macbeth, and Sam Hunter on the World Class Agency podcast. Some really interesting information at the end there around kind of pest and inspection reports in Australia, and how we can perhaps get sellers paying up front for surveys. I appreciate that might play havoc with your cognitive dissonance, but I truly do believe there will be sellers out there who will pay more for increased certainty on finding a buyer in a quicker time frame and going through to completion. And if anyone wants to talk about that further, please do give me a shout. And then the last column, which is a new one I've put in for this month in this Q1 update, is number of properties relisting. So come off the market and they've come back on with another estate agent. So as I've reported above, withdrawn properties on the rise. They're coming off the market, having a bit of a rest, coming back on. So 18.5% up on Q1 23, 22.5% up on Q4 2023, and then almost 24% up on the 6-year average. So more sellers are coming off the market and changing estate agents. So now is a great opportunity to be targeting those second-hand properties. If anyone wants any advice on the best way to do that, please do reach out to me. Typically about 39% of the properties I used to sell had failed to sell with another estate agent. And I've got strategies in place as to how you can target those. So please do feel free to reach out to me on that. Right, last couple of bits here. Let me just zoom out on this. So we have got new listing average asking price and then new listing average pounds per square foot based on the average asking price. We're looking at Q1 23, Q4 23, and then Q1 2024. So as you can see here, asking prices are up about 5% on new listings. So moving in a positive direction, and the same with pounds per square foot as well. You can see it's been quite an increase. However, we must remember the amount of price reductions that have been happening is that sellers and estate agents, again, being a little bit too optimistic with the positivity in the air at the end of 2023 and the start of 2024, just making sure that we sort of temper that optimism and make sure that it's more realistic on that. And then the last bit is the really important one, is the sale agreed average asking price and average pounds per square foot. So as you can see, in terms of average asking price of sale agreed, it's pretty much where it was a year ago, according to this data, and very similar to where it was in Q4 2023. The same can be said for pounds per square foot. It's gone up ever so slightly at 336. So that's the most important figure for me, is what the properties are actually selling for. So yeah, just something to consider there. Now, I don't have this on the screen at the moment, but something I'm just going to share very quickly, just looking at my second screen, is that what I found was that typically properties that end up reducing their asking price from a pounds per square foot basis versus those that actually go sale agreed, I've looked at the last half a dozen years and they're typically overvalued by about 10%. So figure on average for the last half dozen years is 9.77%. And in terms of properties that actually withdraw from the market versus those that are newly listed, there's about an 8.5% difference in terms of pounds per square foot. So those that were withdrawn from the market, typically a pounds per square foot is about 8.5% higher than the average pounds per square foot for a new listing. So all I'm saying is you're typically finding that there's around about a 10% too much on properties that are reducing or withdrawing from the market. So again, some good information to know when you're speaking to sellers in a living room who are trying to get an increased price. If anyone hasn't heard me speak about this or is not familiar with it, go and check out the endowment effect. Really fascinating research in terms of why sellers think that the house is worth so much more money, why it was built by the builder for himself. It's the biggest plot. It used to be a show home and all that jazz that you've heard over the years. So yeah, just reporting on those figures there. The other thing that I just want to share as well, again, just looking at my second screen, is really for typically so far this year, Q1, nearly for every property that has actually gone through to completion, there's been a price reduction on a property. So roughly speaking, Q1, about 50.5% of properties have actually gone through to completion and 44.67% of properties have had a price change. So again, just some really useful information to have if you're going up against another agent who is promising the world, higher price, lower fee. Again, you've got this data to back up what you're saying. So remember, the public is just going to go, oh, you're going to tell me a lower price because you just want to get it sold. Actually, there's going to be data to back that up. Now, before I move on to the different sort of house price indexes, I just want to run through a couple of bits on the Bank of England base rate and where inflation is at. So again, I've just written this down in my notepad as opposed to having something on the screen. I think it's really useful information to have. So in February, inflation was at 3.4%, which is positive news, getting close to that 2% figure that the government want. Just remember the very, very, very long-term average for inflation has been almost 5.5%. So just remember we are actually moving in the right direction, and a bit of inflation, there's nothing wrong with that. That is just what happens. And it is actually the lowest it's been since September 2021. You're probably not going to see too much of that in the media. So again, we're moving in the right direction. The Bank of England base rate, just move on to that. That has paused 5 times in a row now. Okay, so 5 times in a row it's paused at 5.25%, which is great news. In the last meeting to discuss the Bank of England base rate, no one voted to increase the base rate. I think 8 out of the 9 members chose to pause it. 1 wanted to reduce it. So it really does look like we have peaked at 5.25%, and there are bets on a couple of reductions happening this year. But I'll come on to sort of where rates are at a little bit later on in the recording. In terms of the Bank of England base rate as well, 5.25%, you will still get the media saying it's the highest it's been in 16 years, which technically it has. Again, the very, very, very long-term average is 5.91%. So just remember that in terms of isolation with the base rate, it is lower than it has been as a long-term average. And then, yeah, 14 times it increased in a row from December 21 to August 23. So to have 5 pauses in a row is really, really good news there. Anyone who's hoping that we're going to return to sub 2% base rate, just remember that the only time in history that the base rate has been below 2%, this goes back to the 1690s. It started at 1.5% in January 2009, and then it started working its way back up in December 21. So it's about a dozen years of sub 2% base rate. So just something to remember there. Right, on to house price indexes. If anyone's got any questions on anything I've just said there, just give me a shout. So on to the house price indexes. So to start with Rightmove, so 1.5% monthly rise in March. They're saying that's the highest it's been for 22-year average of 1%. Increase in sales agreed, as I sort of reported earlier, and an increase in buyer demand. Again, that would make sense from more sales being agreed. Just to zoom through a couple of bits here. So average asking price is still a little bit below the peak of May 2023, but again, moving in the right direction. Interestingly, average time to find a buyer 71 days. That's the longest time it's been this time of year since 2019. Just goes to show that there is a 2-speed market. I love that language which is being used at the moment. Those that price their property attractively are getting sold in the first month. Those that don't end up reducing their price, taking twice as long to sell. And then 5-year mortgage rate. That's quite interesting. So I said I'd speak about this a little bit. 4.84% compared to 4.64% 5 weeks ago. So edged up ever so slightly. So again, anyone out there who's saying to you as an estate agent, oh, I'm waiting for rates to come down significantly, I'm waiting for prices to drop. They've perhaps been waiting for that to happen for a year to 18 months now. Rates have come down a little bit, prices come down a little bit. If they're waiting for it to go any further, again, the data doesn't support that happening. So might as well get on with it, because once rates have settled and prices start going up, there'll be buyers back in the market, increased competition, prices will shoot up, and they'll wish they would have done something sooner on that. So just to scroll down on a couple of bits here. So we're going to look at average asking price trend, again, on the way up, having sort of dropped to its lowest at the back end of last year. Affordability trends I've discussed previously. Monthly percentage change in average asking prices, again, 3 months in a row on Rightmove, which is good news. Average stock per agent, again, pretty steady there, which is nice to see. And whilst average time to secure a buyer is considerably higher than it was a year ago, again, it's moving in the right direction. It looks as though it has peaked there. Again, maybe just towards the back end and start of this year, sellers getting a little bit too optimistic, meaning that it's taking a little bit longer to sell because of price reductions. So I won't go over the regional trends. That covers off Rightmove House Price Index. On to Zoopla. Some really interesting data from Zoopla here. So 96.1% percentage of asking price being achieved at the moment. So if you're achieving, ease of maths for me, 98.1%, you're 2% better off going, someone is 2% better off going with you versus, let's say, the average agent. Well, if you're trying to battle getting an extra 0.5% on your fee, again, talks about increased certainty of selling, more likely to get the best price, therefore more money in their back pocket. Probably said it before in previous episodes, but shout out to Luke St. Clair and the Knightsbridge colleague app. It's unbelievable for putting that information into a fee calculator and using it in the living room. I promise you, if you don't already use it, it's a game changer. It will help you increase your fees and it will help improve conversion rate as well. So growth in sales up 9%. Annual UK house price inflation only down 0.3%, as I would have said in previous recordings. You'll see as I go through this data, each bit is slightly different because they're taking different data points. So that's why I'm doing this comprehensive market update, so you know all the information out there from the various different indexes. Right, so positivity here, buyer demand up, number of sales agreed up, flow of new supply up, stock of homes sale up. All positive news for confidence in the market. And I think Richard Donnell, I think, is brilliant at Zoopla. Some really great language here. Sellers need to remain realistic on where they set the asking price if they are to take advantage of improved market conditions to secure a sale and move home in 2024. I'd recommend using that kind of language going forward. So really, 2024 is set to be a year of better sales volumes and pretty flat house prices. That's what all the data is showing so far. So sales agreed in Q1 versus Q1 last year on the up. Mortgage rates have fallen to 4.4% for a 75% loan to value 5-year fixed rate, down from over 1% from a high of 5.8% in June 23. So I did just say in the previous slide of Rightmove rates have crept up a little bit. Just remember they are down on where they were a year ago, which again is positive news. And then if I scroll down, this is an interesting one here. So as I said, 96.1% of asking price being achieved. So it has crept up slightly from the last data at the back end of last year. So we're talking, what, 0.6%. So I think that shows the strength in the market, that it is returning. But what's quite interesting is 2/5 of sales, so 41% of newly agreed sales are at below 5% of the asking price. So 41% of properties are achieving less than 95% of asking price. I think the last Zoopla update said that around 21% are achieving below 90%. So just something to bear in mind. Again, if you're going out to see someone and they've been promised well by another estate agent, and you say, look, there is a 40% chance you're going to achieve below 95%. That's why they're promising you a price up here and tying you into a long contract. So just going to work your price down and then show evidence to support that. As I said earlier, around 44.5% of properties so far this year have had a price reduction. But positivity, discount to asking price narrows in Q1 2024. So we are moving in the right direction. So it's narrowed from the 4.5% discount in November to 3.9% in March, which is around a 10 grand below asking price on average property prices versus a 14,250. Again, probably not going to see too much of that in the media. So you've got to be conscious of which conversation you have with a buyer, which conversation you have with a seller, but some positive news there for any buyers who are trying to really chip you on the price on that. Again, greater choice for buyers. Two ways looking at this. One, it's going to keep prices in check. More choice for buyers equals more competition for sellers. So you've got to be conscious of that. But as you can see here, pretty stable and return to where we were pre-pandemic. This graph here, bar chart, whatever you call it, that figure on the right hand side, that needs to be so much higher. I'd say probably a third higher to really have significant price drops if we look back at previous declines in the market. So there is actually still a pretty steady flow between supply and demand on that. Now, there's 32% of homes that are listed for sale for 3 months or more and are still listed at the same asking price. So again, arguably out of contract, gone a bit stale, agent not telling them to do anything on price or marketing. Some really good ones to go after there. But also flipping that, if I've understood this correctly, that means that 68% of properties that have been on the market for 3 months or more have had a price change. And Rightmove reported in the past that those properties are 1.5 to 2 times more likely to change estate agents. So little tip for you there. If you're wanting to go target secondhand properties, go after the reduced ones. I think that covers off the Zoopla house price index. So a couple of things with on the market. So if I just zoom through on this, just quickly on the right hand side, February 24, 29% of people had not thought about their finances. So really good question to be asking to try and get more mortgage referrals. Of course, I'm not condoning conditional selling, but giving the option of discussing their finances to benefit them, the sellers, and your time as well. And then interestingly, around 23% saying they don't actually need a mortgage to purchase as well. So there's a lot of cash or cash from sale still in the market. And then average asking prices, as you can see here, just steady Eddie is all I can say on these average asking prices, which is good news. After the craziness we've had during COVID, after COVID, mini budget fiasco and the hangover from that, just having a steady market at the moment, I don't think is a bad thing. And I don't know if the timing would have meant the spring budget would happen on my last recording, but I would say that no intervention from the government is actually a positive thing in the short term, because it doesn't mean that there's any like holidays or anything that's going to make some craziness in the market. I think just steady market at the moment is a good thing for all. And then last thing here, really interesting data. So in February, 43% of homes were selling within the first 30 days. So again, you're in someone's living room. Look, do you want to be in 43% but selling their home in the first month, which typically means they're going to get the best price and go through to completion? Yes, I want to be in that 43%. Well, here is our process to get you to that result. Do you want to be in the 57% but don't sell in the first month? No, I don't. But if you go to the other agent at the lower fee, higher price, poor marketing, that's probably what's going to happen there on that. So that is the portal updates. I'm going to quickly flick through Nationwide Halifax. I think because of the timings of these, I probably went through these last month anyway. But again, in terms of the Nationwide House Price Index, as you can see there, not really any different to a year ago. So positive there. And again, if you actually look at 3-month on 3-month percentage change, positive there 4 times in a row. We've had positive monthly change 2 times in a row, and we're back in the positive for the first time since Jan 23 there. So all good news there. And you can see here, as I discussed earlier, swap rates have crept up ever so slightly. So again, any buyers who were waiting for rates to continue to drop off, they've perhaps found their sort of level at the moment. So if they're holding off for that, I'd suggest that the recommendation to them is to not miss this market. And then just last bit on here, as you can see, upward trend on house price change month on month. And then you've got the actual average UK house price. It dipped down and it's kind of steadied there. UK house price earning ratios is again on the way down, getting close to long run average. It's still going to be way off there, but again, moving in the right direction. Halifax house price index. So 5 months in a row, Halifax are reporting price increases, which is great news. Annual basis, they're saying they actually grew 1.7%, which is positive, and not a million miles off the peak that was seen for them in June 22, so about £1,800 off, which is positive. And then if we scroll down here and just have a look at this, as you can see, 5 months in a row, positive change, quarterly change 3 times in a row, and an annual change 3 times in a row, and prices again a little bit up on where they were a year ago. So again, positive news there from Halifax. eServe data, again, I think I went through this in the last month, so I won't spend too much time on it. Again, just the way the timings of this happened with the bank holiday and Easter. But they're reporting price up by £3,000 in February, largest rise in prices in the last 17 months. So really positive news there. Again, though, transactions remain lowest level in over 10 years, but that the sales being agreed and transactions being supported should continue to return to the market as that positivity comes back, with more supply of property, more sales being agreed. So obviously everything that's happening now in a positive term is not going to be seen in those figures for several months to come. And with Land Registry as well, you'll find that there's probably such a lag that it takes half a dozen different releases for all the data to get put in as well on that. Again, house prices a little bit down. They're reporting on a year ago, but moving in the right direction, which is all positive news there. And I won't really spend any more time on the eServe house price index. I think I did it last month. Right. Land Registry data, as you can see, a very flat line here over the last 12 months. Again, Land Reg data is going to be lagged, is going to be a bit behind, but it is the most factual data, really. It's got cash, mortgage, completed transactions. So Feb 23, it was 281.5, and in January it's at 282. So again, moving in the right direction, and this is going to be arguably 6 months behind. The January completions would have been sale agreed probably what were we saying, 4 months before that, December, November, October, probably in September. So again, it's actually showing ahead of time what's going on there. UK house price index, again, I've just reported on this in the previous slide, but average UK house price is around 282,000, only down 0.6% on a year ago, up 0.5% on a month. I'll probably say this every episode, but would have snapped your arm off to be where we are a year ago on that. Just whilst everyone's watching, the February UK house price index will be published at 9:30 on Wednesday, 17th April. So put that in your diary and then get a blog, get it on social media, talk about what's going on in the market. And then you will be seen as the conduit of all the information in your marketplace, increases trust and confidence in you. And then you've got that know, like, trust. People are more likely to do business with you. So strongly recommend get that in your diary, as I would with all the other house price indexes I've been talking about as well. It gives you at least a dozen pieces of content each month on market updates. Just to scroll through this, I think this was what I want to look at. So again, this map is getting more and more orange and red as the months go on, less and less blue, which is a positive sign for the market. So good to see that. Again, something you perhaps want to be using on social media. And sales volumes, if I just scroll down, again, you can see we've got a long way to go to return to the sales volume seen in recent years. But just remember, some of that was the craziness of COVID, stamp duty holiday, record low interest rates. It's not a market we're in right now. So lower sales volume. I mean, one of 3 things I guess you need to do: sell higher end properties to increase your fees, increase your percentage, or take a bigger share of the market. So it's deciding which ones out of those that you want to be doing. And then I think I would have said this before, but typically new build properties are more expensive than secondhand stock. About 1 in 10 sales are new build. So yeah, existing resale property is going to bring the average price down. Same with first-time buyers. About a third of property sales are first-time buyers. The average price paid by a first-time buyer is significantly lower than a former owner-occupier, and cash buyers equate to about 1 in 3, which again, they're an average price. I would have said that at a lower average price as well. So just something to bear in mind there. Right, UK house price index. Just going to zoom through this. And what am I doing? I'm on the wrong one. Let's do that again. I've already just covered this off briefly. But again, you can see that first time buyer and cash is lower than the mortgage and former owner occupier. That's what I wanted to say. And same with new build, it's higher than the existing resold. And again, there's less new build transactions. So just wanted to confirm that. Transaction levels, as you'll see here, seasonally adjusted, 6% lower than a year ago, 1% up on January. You'd normally expect completions to be higher in February than January. So again, we've still got a long way to go. But if we're looking ahead of time, number of properties coming to market, number of sales being agreed is hopefully showing future data that we are moving in the right direction for transaction levels. And if I just scroll through onto this, let's change that to a table. So you will see here, so seasonally adjusted on the right-hand side, again, still lower than in recent years. Arguably, if there is such thing as a normal market, 2015 to 2020 will be the more realistic ones. So hopefully we can get closer to that 100 figure. I'd ignore the 21, 22 because that was the craziness of COVID. Then from a financial point of view, again, seasonally adjusted. If we ignore the 21, 22, and then 22, 23, again, 1 million transactions seems to be the norm in recent years. Again, we've got a little way to go there. So lower transaction volumes. What I see a lot of agents do is they start chopping their fees. They start drawing back on their marketing. You want to increase, it sounds ludicrous, but you want to increase your marketing, increase your fees in a low volume market, and not be part of that bum fight there. Right, last few slides. So haven't got the mortgage approval data in yet. Again, I think just with Easter. So let's just zoom up to start here. So to scroll down through this, let me just go. It's annoying that it was doing this earlier. So if we just look at this, so percentage of business above the bank rate. So as you can see, a lot of business is still at the bank rate or less than it, or not that far above. So in terms of being 4% above the base rate, it only makes up 2% of the advances. So just again, yes, the base rate is increased significantly. Yes, mortgage rates are a lot higher than they were. And yes, there is going to still be some pain to come this year in terms of people coming off fixed rates, but a lot more people on fixed rates than they were 15 years ago, which is why we've got a much better equity. Stress testing in recent years has meant a lot of people can afford these new mortgage prices. So just something to consider there. Again, I'm not trying to be unrealistically optimistic. I appreciate it's going to be tough for some people, but for the majority, it's actually something that they seem to be able to swallow. Gross advances by loan to value, really interesting data as well. So at the moment, only 5.5% of gross advances are above 90%, and 75% or less makes up 60% of the markets. Just goes back to what I said a minute ago about really strong equity, much better loan to value than we would have seen 15 years ago, which is why we haven't seen the forced sellers coming to market and a massive increase in supply, which is why we just appear to have quite a balance in supply and demand. And this was the last one I wanted to look at. Here, there we go. Right, so if we look at buy to let, as you can see here, buy to let is making up about 7% of the market. And as you can see, if we go back up here, it's 13.5%, so it's pretty much halved. Tax implications, mortgage increases, legislation in terms of renting, obviously all of that going on has meant the buy to let mortgages is reducing. So less investors in the market, but there is still some. Home movers, so the red one, again, people looking to move home as rates have settled. More home movers have entered the market, which is positive news. And then first-time buyers are back in as well at about 27% a share of the mortgage market. So again, there are first-time buyers there. Rick's report is going to be much of the same in what I've discussed in the previous ones. So prices on the up, inquiries on the up, new instructions on the up, sales agreed seem to have plateaued. So just something to consider there in terms of as new instructions have come on, confident sales agreed, are we then perhaps asking a little bit too much? So just something to watch out for there. Price expectations, again, in the short term seem to have plateaued, but over the next 12 months, increased positivity. Sales expectations plateaued for the next 3 months, but increase over the next 12. And then sales market chart from surveyors up, which is good. Stock per surveyor on the way up. National sales to stock again plateaued. So again, is that too much confidence return to market? Are we getting a little bit too carried away for ourselves, with ourselves, should I say? So just something to consider there. And I think that covers that off. And then last few bits that we're going to run into. So home.co.uk, their house price index. The thing I really like to look at here is the total sales stock. So there's 451,000 unsold properties at the moment. There's 11,000 more than last month, and it's the same as March 2019. Again, arguably a normal market. We're at the same as then. So yes, people are paying more for mortgages. Demand is still perhaps a little bit down on 2019, but there is still demand there. Price it right, market it right. There's definitely sales to be had. New instructions entering the market during February, 13% more than the year before, which is great news. And then supply is up 8% in 2019. As I said earlier, we need to have significantly higher supply of property than we've got now for prices to reduce significantly as well. So just to run through this, as you can see, asking price trend pretty steady there, which is good news. And then if I zoom down here, again, during the COVID market, number of properties was crazily low. And this graph here, which I'm just hovering, that would have had to have continued going up and up and up above where this line ends, in my opinion, for there to be significant price drops. As you can see, it's sort of flattened out now there as well. And if I zoom down and just come out of this a little bit, again, you will see that things are actually pretty steady. Average asking price 0.1% on the home.co.uk and monthly 0.4%. So again, moving in the right direction. Right, last couple of bits. So Bricks and Logic, their March update, they basically said that from the end of November to the end of February, sales value average was 0.6%. That ranged from a 2.8% increase to a 2.8% decrease. Lots of red on that map, like I said earlier, and hopefully that continues to get more and more red as time goes on. And then the house price forecast from Really Moving. So they look ahead of the market by 12 weeks because of the conveyancing quotes they get in. And I think from my research on it, they believe that they have data on 10% of the market. And you'll see here that they're predicting Q2, the average price to be around 309.5, and in Q1, it being 311. So again, pretty steady in the market there as well. So I hope you've enjoyed my Q1 2024 market update. I will be back at the start of May for the April update. If anyone has any questions in the meantime or anything they'd like to discuss further, please do get in touch. Please also do like this video, follow, subscribe to the channel, and share it out with as many agents as you can, because I'm on a mission to become the most useful person to follow for UK estate agents. And that is actually just giving the most comprehensive UK market updates that I can to help improve estate agents, sales conversion rate, help them get better fees, and make sure the public are getting a better service as well. So thank you very much for watching, and I will see you all next time.